All right, this video is going to be talking about the expanded circular flow. This is module 10. You can also find this in your textbook, but I'm going to be following basically the same format that I did for the simplified circular flow, but now we're going to add to it. So I'm going to be doing this on a smart board, so excuse the slowness of it. So we're starting off with our 4 normal boxes. Okay, so our 4 normal boxes that we did before with individuals. We have our factor market. We have our product market. And then we also have our businesses. Now notice that when I'm drawing this, I am putting the boxes fairly close together. The reason being is that now when we're expanding, we are actually going to be adding boxes on the outside. So behind individuals, we're going to add government. Above factor market, we're going to add the financial market. And then to the right of businesses, we are going to be adding the rest of the world. Okay, now if you would like to color code with me, I am going to be coloring this, and so I'm actually going to have 4 colors. So colors this time, unlike the circular flow last time where it was dependent upon one color was the factors of production and the goods and services. The other color was the money aspect. This time, all of this is going to be money. Okay, we're going to completely ignore the factors of production and the goods and services. I will remind you along the way what we're actually paying for, but I did want to tell you a heads up that the colors this time are depending upon what boxes we're talking about. So we're going to start with individuals. So if you remember from the simple circular flow, and I'm going to change the color of my pen here. So I'm going to actually make this, let's say, orange. Okay, so we're going to talk about individuals. If you remember from the simple circular flow, we talked about that the circular flow is based on the idea that we have individuals owning the factors of production. So individuals get most of their income from selling the factors of production. If you remember from the simple circular flow, the individuals bring their factors of production to the factor market, which then sells to businesses. So when we did this for the simple circular flow, we were simply showing that the businesses are going to pay rent, wages, interest, and dividends to the factor market. Okay? The factor market is then going to have to pass on all of that stuff to individuals. So all of that rent, wages, interest, and dividends gets passed here. All right, now I'm going to give it a number. So let's say that from all of this, we sell some land, we sell some capitals, we sell some labor and some entrepreneurial ideas. As a result, we end up with $1,000. Okay, so now what can we do with that $1,000? Well, $1,000 you can either spend it, you can save it. But hold on, there's a part that we're forgetting. What happens when you get paid a salary? What happens when you get paid a check? Okay, your pay stub in there will include not only your gross, okay, your net, but your gross, your net and your gross income. What's the difference? Well, what you have to take into account is that you got all of those taxes that are taken out. So let's say that our individuals here, they have $1,000 that they make. Let's say that they are going to have to pay taxes. And so let's say they pay $100 in taxes. We're keeping things simple. Okay? Now we have $100 in taxes that are taken out of our $1,000. So now we have $900 left. So $900 left. Now, so like I said, some of it we can save, some of it we can spend. All right, so let's say that we're going to save some of it. We have $900 left. And when I asked students in class how much they wanted to save, a lot of them said, let's save half of it. So, all right, so we're going to save half of it. Where is that money going to go? We're going to go to the financial market. So this is going to be the financial market. We are going to have savings go here. So we're going to say that we're going to save $450. All right, so that means if you do the math, we took that out of our 1,000 that we had coming in, we took 100 out for taxes. We took 450 out for savings. So we have 450 left. So that means we can go and spend that. Okay, where do we go to spend our money? Where do we go to buy goods and services? That's right, from the product market. So now we are going to go, and this is called consumer spending. So this we're going to say is $450, okay? Because that will equal out all of our money. All right, so that's our individuals. Now we're going to look at, by the way, as a reminder, okay, as a reminder, so orange is our consumers. Okay, now we're going to look at what about businesses. Okay, so businesses, they have a couple things going on. They have those factors of production that are coming in from the individuals, from the factory market, and they're going to want to make stuff. So they have land, they have labor, maybe they have some loans in the form of capital, they have some entrepreneurial idea, but sometimes that's not enough, okay? So what we have happening is that, by the way, my red is going to be businesses. Okay, so sometimes they're going to have to borrow money. So they're going to take some money out of the financial market. So they're going to take money out. So they're going to get money from borrowing. So they'll borrow some money from banks. Okay, but they will also get money from sale of stocks and bonds. Okay, so borrowing money from borrowing money and then money from sales of stocks and bonds. So keep in mind that the financial market is going to be including not only banks, but it's also including, for example, the financial industry, so stock exchanges, those kinds of things. Also keep in mind there is a difference between stocks and bonds. Stocks are going to be ownership in a corporation. Bonds are going to be where I am loaning a corporation money. And the corporation is going to have to pay me back plus interest. Okay, so keep that in mind. All right, so let's say that all of this borrowing and money from stocks and bonds. Let's say that our businesses get, let's say, $1,000. I'm putting up this at the top. $1,000 they're going to get. Now, what are they going to do with that money? Well, even though they have land, they have labor, they have a bunch of money, they have some ideas. But sometimes what happens is that they still need to be able to purchase stuff. So, for example, equipment, okay? Man-made items that are already out there. They need to be able to buy that stuff. So where do you buy goods and services? You're going to buy that for the product market. So they are going to go and bring to the product market what we call investment spending. So maybe, for example, they're going to spend all spend it on products at the product market. So they're going to use that to be able to buy some machinery and equipment that they need to be able to make their business work. Okay. Now we're going on to government. So I'm going to make government green. Okay, government's green. So first off, government. All right, so there are things that the government provides to us. Now, obviously, they provide a lot of goods and services to us, things like police and fire protection, roads, they provide public schools to us, parks, those types of things. But there is also money that they provide to us. Okay? There are a bunch of different programs that provide money directly to us. So this is going to be what we call transfer payments. So this would include, for example, Social Security, unemployment checks. This is going to include welfare checks. This is going to include tax refunds. Those are going to be transfer payments. So let's say for kicks and giggles that we're going to say that 500, or we're going to say $50. $50 is what we are going to get in transfer payments. I know that's hard to read, $50. Okay, now here's the thing is that, okay, the government collects a bunch of taxes from us. They provide us with transfer payments, but remember there are a bunch of other things that they do provide to us, like roads and police and fire protection and schools and all that stuff. Here's the thing though, is that they cannot provide all those things to us with just taxes alone. They don't collect enough money in taxes. So, as a result, they're going to have to borrow money. Where do you go on here to borrow money? That's right, you go to the financial market. So, this is going to be government borrowing. Okay, government borrowing. So, we are going to say that the government is going to borrow, let's say, $600. All right, so the government's going to borrow $600. So now what we have happening is that they have money coming in from taxes, they borrow money from the financial market, and so now they're going to go and spend it. Because yes, they need to spend money to be able to provide us with goods and services. So for example, if we're talking about police department, okay, the police department, they need, for example, cars for their police officers. So they're going to go and buy some goods and services. Where do you go to buy goods and services? That's right, we go to the product market. So this is going to be government spending. Okay, how much can they spend? Can you figure that out? So we have $600 from borrowing. We have $100 from taxes, so that's $700. We already used $50 of it for transfer payments, so that leaves us with $650 left. So we're going to say our government spending is all of that $650. We're assuming that they're not spending any more than they're taking in. Okay, now, last one. We're going to talk about the rest of the world. So apparently my world is going to be purple. Sorry. Okay. So the rest of the world. All right. So what do we have going on with the rest of the world? So here's the thing: is that we have the rest of the world with businesses in it that are making stuff all the time. Okay. So some of it. Okay, some of it is going to be sold in their country, and some of it is going to be sold to us, right? So what happens is that we are going to go and buy some of their products. So what is it called when we go and buy some of their products? Imports, right? So we are going to go and have the product market, because that's where you go and get goods and services. So you will go to the product market to buy foreign goods and services. And so we are going to pay, I'm going to pay for $200. Okay, so we pay $200 for imports. So the reason it goes from the product market to the rest of the world for imports is because of the fact that we are paying the world manufacturing company for the imports that we are getting from the product market. Now, keep in mind that some of these businesses are not going to be able to make their products just from the money that we pay them or for the money that they're charging their the rest of the people in their own country. So they're going to need to borrow money as well because this is expensive. So they're going to actually get from the financial market. They are going to borrow money, but we also are going to have stocks and we also have stocks that are going to be included in here. So borrowing money and money from stocks and bonds. Getting to the edge of my board here. Money from stocks. Sorry, this is messy. And bonds. Okay, so borrowing money and money from stocks and bonds. So we are going to say that the money that they borrow, we're going to say that they are borrowing $500. Sorry. Okay, so they're going to borrow $500. Now, keep in mind, okay, that they're going to take in $500. They're going to take in money from imports. Now, what do they use that money for? All right, well, some of it is going to be because we are actually going to sell them stuff. So some of it is going to be used for exports. So paying for exports, some of that money will be paying for exports, and so maybe, for example, they are going to pay $400 for our exports. All right, but at the same point in time, as we all know, is that the rest of the world sometimes also goes and invests with us and lends us money. So they will also lend money to us. Here's a national debt; they lend us money all the time. So lend money to us. And so let's say that they lend $300. And I'm obviously keeping these numbers simple for a reason. Okay, now this is our total expenditure for the book. And it looks like giants, right? So here's what happens though, is that we can actually determine in your book, they actually have a black arrow going from the product market to businesses. So they actually have an arrow going here. I think that is kind of confusing. I'm not going to do that. I don't have a logical reason for why to do that, so I'm going to do it here. So I'm going to do, out of all of this, this is GDP. So that whole great big confusion is GDP. Because what we end up having is that we have all the arrows that are going into the product market actually determine what GDP is. And remember, GDP is going to be equal to government spending, which is our green arrow, so that's our $650, plus consumer spending, which is our orange arrow, which is $450, plus our investment spending, which is $1,000, plus our net exports, which is what we call X. Net exports is going to be our exports minus our imports. Okay, so if you did all of your math, okay, so exports minus imports is 400 minus 200, which is 200 plus 1,000, which is 1,200 plus 450 and 650 should equal, in our complicated accounting here, is about $2,300. That, my friends, is what GDP is. Okay. Now, the other thing I want to point out from this mess, okay, I showed box equal each other. So we actually did this naturally and we didn't even realize it. So pay attention to, for example, all of our orange arrows. We had $1,000 going into the individual box. That was the only arrow going in. But if you add up all the arrows going out, savings plus taxes plus consumer spending, that is also going to be $1,000. Okay. If you look at it from the government standpoint, okay, adding all the arrows going in, the $100 from taxes, the $600 from government borrowing will equal the government spending. Okay. Imports and exports, the rest of the world. Okay. If you look at all the numbers coming in, so the 500 plus the 200 is equal to 700, but also is all the numbers, all the arrows going out. The 300 plus the 400 are going to equal each other. And then the red arrows, the 1,000 obviously is easy, equals the 1,000 that they borrowed. So hopefully this makes sense. Hopefully that helps. Let me know if you have any questions, and I am